Welcome to a World Gold Council vodcast on the case for gold as a practical investment. I believe the best way to evaluate the suitability of any asset is to examine it under three headings. Are there tactical reasons for buying it now for short-term returns? Is it possible to make a case for a long-term strategic allocation? And is it practical? The first two aspects of the investment case for gold, the tactical and the strategic, are dealt with in other vodcasts available from the World Gold Council. So now I want to focus on the status of gold as a practical investment. The gold market consists of a lot more than just what's traded on the futures exchanges around the world, in particular the COMEX division of the New York Mercantile Exchange in the United States and the TOCOM in Japan. There is also a huge over-the-counter market, so that it's no exaggeration to say that the global gold market is deep and liquid and trades 24 hours a day, 7 days a week. Like any other over-the-counter or wholesale market, there are no fully comprehensive and reliable statistics on trading volumes available. The best estimates I've seen of trading volumes point to a minimum of 60 billion US dollars every day, and the reality could be several times that. So liquidity should present no problem for most investors. If you add that to the strategic and tactical case for investing in gold, it becomes clear that there are a lot of benefits gold can bring to a balanced investment portfolio. But its role has been limited by the fact that many investors have perceived gold bullion as cumbersome, costly, and complicated. At the World Gold Council, we decided we needed to address these issues, to develop an investor-friendly gold product that would take the friction out of investing in gold. What we did was a lot of market research in which we quite consciously and deliberately focused on investors, from individuals all the way up to big institutions, who did not invest in gold, and we asked them to tell us why. Overwhelmingly, the message we got back was the three C's: cumbersome, costly, and complicated. So we went back to our sample and asked them what sort of gold investment product might conceivably interest them. And what investors told us was essentially two things. They wanted an investment that exactly matched the gold price, in other words, as pure a proxy for gold as it was possible to get. And they wanted an investment they could trade as easily as they trade equity shares, something they could trade through the medium of a regulated stock exchange. The product we came up with was the Gold Exchange Traded Fund. We pioneered these with a launch in Australia in 2003, followed by a similar product in London later that same year. Then, in November 2004, we launched our flagship product GLD in the United States. GLD, which trades on the New York Stock Exchange ARCA platform, was initially launched as Street Track's Gold Shares, but it was renamed Spdr Gold Shares on May the 20th. We're very happy to be a member of the tremendous family of exchange-traded funds that State Street Global Advisors has built up under the Spdr brand. More information and a prospectus on GLD are available at the website www.spdrgoldshares.com. And I'm very happy to be able to report that we received approval to offer trading in options on GLD on June 3rd. So what are these shares? GLD shares represent an undivided beneficial interest in and ownership of a trust, and the sole asset of that trust is gold bullion. The shares are designed to track the price of gold minus the expenses of administering the trust. Each GLD share is backed by approximately 1/10 of an ounce of gold. And all GLD shares are 100% backed by physical gold bullion, held in the form of 400-ounce London Good delivery bars, stored in an allocated account in the London vaults of HSBC Bank. The trust's sole asset is physical gold bullion. It doesn't participate in any derivative transactions. The trust's gold can't be lent or leased out to the market because it's held in an allocated account. And that word allocated in the gold context means that the specific gold bars the trust owns are individually identified and they're kept segregated from all the other gold in the vault. The trust doesn't deal directly with individual investors, only with approved and appointed authorized participants. These authorized participants, or APs as we call them, are large broker-dealer firms that hold share accounts with Depository Trust Company so they can handle transactions in the GLD shares, and they also hold unallocated gold accounts with HSBC Bank in London so they can handle the gold transfers associated with creating and redeeming the shares. Authorized participants can create or redeem GLD shares every day the New York Stock Exchange ARCA is open for trading. And this continuous creation and redemption process minimizes potential tracking error between the price of the shares and the price of the underlying gold. The role the APs play in the operation of GLD is perhaps the most misunderstood aspect of the way the gold ETF functions. As market makers in the shares, the APs must assess the availability of the GLD shares on the New York Stock Exchange ARCA every time they receive an order to buy or sell. If they believe that there's insufficient liquidity in the shares on the exchange, they buy gold and transfer ownership of the gold bars to the trust. In return for the gold, the trust creates new GLD shares and issues them to the relevant APs so that they can satisfy their orders. The trust doesn't buy gold to back GLD shares because it doesn't need to. Annual expenses are capped at 40 basis points per year of average daily net asset value, NAV. The trust accrues these expenses every day so that all shareholders pay their fair share, and sells a tiny quantity of gold each month to pay the expenses. The result is that over time, the quantity of gold backing each share will diminish, but it's an extremely gradual process of erosion. 3 years plus of 40 basis points a year, compounded, adds up to an expected discount of around 1.4 or 1.5% to the gold price, and that's right where GLD is trading today. In the U.S., GLD shares are eligible for inclusion in retirement plans, such as individual retirement accounts, IRAs, and 401ks. The Internal Revenue Service in the United States looks through the equity structure of the product and treats the shares as a direct investment in the underlying asset, physical gold bullion. The tax code exempts gold bullion investment products from the collectible category for the purposes of retirement plans. But just to make absolutely certain, we obtained a private letter ruling from the IRS to confirm that GLD qualifies for all retirement plans. There's a peculiar thing about the United States tax code, and that is that the exemption from the collectible category for gold bullion applies only to retirement plans. For long-term capital gains tax purposes, the IRS still treats gold bullion investment products as collectibles, so that gains after 1 year are currently taxed at 28%. And that means these GLD shares also suffer long-term capital gains tax at the 28% rate rather than the 15% levied on other equity securities. Legislation to fix this anomaly has been introduced in the U.S. Congress. With bipartisan support in both the House and the Senate, I'm confident that we will eventually prevail. GLD shares are also eligible for margin accounts, and they're eligible for short sales because they're exempt from the uptick rule. So how does the GLD ETF behave in relation to the stated intention of tracking the price of gold minus the expenses of administering the trust? Our experience with this product since we launched in November 2004 makes it clear that GLD does exactly what it was designed to do. There's virtually no tracking error. The small discrepancy you can see beginning to creep in over toward the right side of this chart simply reflects the gold sold to pay trust expenses, compounding at 40 basis points a year over the 3 years since the product was launched. Daily trading volumes in the GLD since inception has averaged more than 5 million shares. The higher profile for gold over the past few months has lifted average daily trading volume to above 10 million shares. For further information, visit the website at www.spdrgoldshares.com.